that point the last time as well on hotel stocks. Maybe the best has been. I think some of them have corrected from the top. So good on you. Thanks so much, Rahul, for coming down to the studio and in fact giving us your view on a whole host of sectors as well as the approach to the markets. Well, let's shift focus then to another theme. Cement stocks, they've been moving around. Well, there are reports that there are a price increase that's been pushed through in the past 10 days or so. However, some contrary reports came in yesterday that maybe some part of those pullback of those prices have been pulled back. To understand what's the outlook out there, we are joined by Mr. Bangur, the MD at Shree Cement, who joins us on the show. Hi, Mr. Bangur. Always good speaking to you, sir. And thanks so much for speaking to us here on CNBC-TV18. Well, give us a sense in terms of pricing. We're getting conflicting reports that a price increase was tried to push through. But then, post the restart of ACC and Ambuja cements in Himachal Pradesh, some of the neighboring areas, we understand that the price increase have been pulled back. Just to understand, what is the average price now that you compare it with Q3 FY23? Go ahead, sir.
In fact, because of the closure of ACC and Ambuja for quite a long time of more than a month or so, still the price were not affected. The prices were flat compared to Q3, even before the closure and even after the closure. Only because of the seasonal variance, that is in March to June, good demand is there. So now the ground reality is that the prices should increase because of good demand. Almost all companies are having 100% capacity utilization. For example, yes.
Yes, Mr. Bangur, all demand is strong as per what reports indicate and going by what you're saying as well. But just to press on the point on pricing you're saying in Q4 is still flattish in comparison to Q3?
Yes, I am very clear that it is flattish. Some places the price may increase a little, some places it will decrease. Okay. But it is expected that from March onwards, when the peak season starts, when the budget starts ending and everybody has to spend money, then the really demand should pick up. So I think still we are about a week away from some price rise.
Okay, all right. Got that point. So as of now, it's flattish, but you're optimistic that price increases will be pushed through. Now, you have added capacity, and for the first 9 months as well, you have given, good growth on the volume parameter. Could you tell us what do you end this year with in terms of volumes? And what about FY24? What kind of volumes will you be looking at?
This year, in third quarter, our volume growth is superb, from 65 lakh tons to 77 lakh tons, roughly 18% growth in the third quarter. In fourth quarter last year, we were 80 lakh tons. So there is not much scope as our capacity will be limited. We will be ending up with 10% increase in the fourth quarter, 88 lakh tons or so. But in coming year, we are hopeful that our new digital initiatives have taken place. New marketing setup is there, management changes are there. So we expect about 36 million ton in the coming year.
That is FY24, Mr. Bangur?
Yes, that is FY24.
And you said FY23 you will end with what?
About 30 million tons.
About 30 million tons. Okay.
So I am talking about 30 to 36, a tall call.
Okay, 30 to 36. So give us some qualitative analysis, right? I mean, where are you seeing an improvement in demand? Is it more, a lot of it is coming in from private capex, or is it still government capex, infrastructure, real estate? Give us some, nuance on what the next trigger would be for you in terms of big demand.
Demand will be increasing only at the pace of 8 to 10%. That is basically because of the government demands. Government is pushing for infrastructure. People have money. So personal housing in the small cities and the villages is also picking up at a good pace. Real estate sector is doing well. The stocks with the promoters have come down. So all the factors are in the same side, that is positive. With this, we expect 10% the industry growth, and Shree will catch up. Our capacity utilization was low. Now we will be at par with the industry with 36 lakh tons, 36 million ton next year.
Okay, all right. So you're going to grow at twice what the industry grows, and you have the capacities as well coming on stream. So operating leverage will play out, right? Mr. Bangur, what's been disappointing in the last few quarters, you've gone through some difficult times because the EBITDA per ton, it went down to around 700 rupees in the previous quarter. It's recovered to close to around 900 rupees. What is the improvement you're penciling in, say in quarter 4? Will it improve by 150, 200 rupees or more than 1,000 rupees?
No, in quarter 4, there should be little increase. But we expect that from first quarter next year, we have now committed our coal purchase. The prices have come down of coal by about 10 to 15% compared to the third and fourth quarter. So there should be that much decrease in cost.
So your EBITDA per ton by the first quarter of FY24 goes back as of current reckoning. If things change,
yes,
price increases don't go.
And I expect 4 figure.
So 4 figures you could get to in this quarter itself because you're going to be growing by close to 10%.
4 figure in this quarter may be there, but next quarter onwards, I am little conservative as always, but it should be much better.
1,200 rupees per ton? 1,100 to 1,200 rupees?
Maybe it's not impossible.
Okay, 1,100 to 1,200 is not impossible.
EBITDA, to say EBITDA, you are predicting too many things. You are predicting at what cost it will be sold. In a commodity industry, to talk about EBITDA is the really most difficult thing. It is overconfidence. We can talk about our costing, we can talk about our volumes, but EBITDA is totally dependent on the market.
Entirely, and we take your point about how demand is definitely picking up, so that will of course flow through into your EBITDA performance as well. Wanted to understand, will all your growth in the next 1 to 2 years be organic, or are you looking at any kind of inorganic moves as well to achieve this 80 million tons?
Till next year is too short a time about talking about takeover and others. Our growth will be primarily in next 1 year or so, will be what is there in the pipeline, and we are committing more capex. But in a 3-year period or 4-year period, definitely we will be looking at turnovers, takeovers. Right now, we are not sure which company it will be or which area it will be.
Okay. All right, Mr. Bangur, final question before we let you go on this. I want to ask you, because in the past, we have seen personally you have made some investments in other companies, so whether it's with regard to Orient Cement or the likes. What if you were looking at ACC and Ambuja Cements, when it was up for grabs? What would be the realistic valuation? Some on the street believe that it was a good asset around $170 odd. Some believe it should have been around $200. Some it should have been a little less. What's your take?
No, it's up to the individuals how aggressive they may be. I think the deal was done at a fair valuation.
Fair value.
And it became cheaper because not much public holdings have come back to the promoters. So effectively, the cost was lower than expectation.
Okay. Would you, in hindsight, would you have bid a little bit more aggressively?
We don't have that much pocket to take over that big a company, and they would not have sold it in the piecemeals. So the question is highly hypothetical. I have no answer to it.
But you believe that the deal at least got done at a fair value. So I wanted that perspective from you, Mr. Bangur.
Yes, it was quite a fair value.
Okay. All right. All right, Mr. Bangur, thanks so much for stopping by and filling us in with all those details. You've given us a fair outlook in terms of volumes, EBITDA per ton, as well as your view on the cement space as well. But one stock that's been